For nearly a century, the US dollar has been the backbone of the global financial system, the unit of account, the medium of trade, and the world's most trusted store of value. But what happens if that trust erodes? Could the US actually default on its debt? Could inflation silently debase the dollar? And could neutral assets like gold, or even digital currencies, reclaim their place as global reserves? This is not about fear-mongering. It's about the real structural risks behind what some call the slow death of the dollar. Part 1. How the dollar became king. After World War II, the world needed stability. The Bretton Woods system made the US dollar the anchor of global trade, backed by gold at $35 an ounce. Other currencies pegged themselves to it. Even when the US abandoned the gold standard in 1971, the dollar stayed dominant, because global trade, debt, and commodities were already priced in dollars. It offered liquidity, safety, and enforcement. The US Treasury market became the deepest, most trusted pool of capital in human history. And that's the foundation the modern world runs on. But no empire, monetary or otherwise, lasts forever. Part 2. Cracks in the foundation. The first crack, debt. The US government spends more than it earns, year after year. Federal debt now exceeds the size of the entire US economy. That means growing interest payments. If rates stay high, even maintaining the debt becomes one of the largest expenses in the federal budget. If faith in US creditworthiness ever falters, even briefly, global markets could seize. A missed Treasury payment would send shockwaves through every corner of finance, because Treasuries are used as collateral for everything. The second crack, inflation and monetary expansion. To fund deficits, the government issues debt. The Federal Reserve can create money to buy that debt, effectively monetizing it. That increases the supply of dollars while reducing their purchasing power. Over time, inflation is not just a price problem, it's a confidence problem. The third crack, geopolitical distrust. The US has weaponized its financial system, freezing reserves, cutting nations off from dollar-based payments, and using sanctions as policy tools. This signals to other powers. Reliance on the dollar comes with political risk. So nations like China, Russia, and even US allies are gradually shifting, settling trade in local currencies, buying gold, and reducing dollar reserves. Part 3. How the dollar could die. There are 3 broad scenarios for how this could unfold. Scenario 1. Slow erosion. No collapse, just gradual loss of dominance. More countries settle trade in other currencies. Central banks diversify reserves. The dollar remains central, but less so. Its share of global reserves drops from around 60% to perhaps 40%. It still matters, but it's no longer the world's monopoly currency. Borrowing costs rise, inflation runs hotter, and US influence fades slowly. Scenario 2. Crisis trigger. A political standoff, say over the debt ceiling, leads to a technical default. Markets panic, treasuries sell off, confidence breaks. Foreign creditors rush to reduce exposure. The dollar plunges 30–40%. Inflation spikes as imports get more expensive, forcing the Fed into emergency tightening. The financial system survives, but the dollar's aura of invincibility is gone forever. Scenario 3. Coordinated transition. Global powers recognize the need for a new order before crisis hits. A basket of currencies or assets, maybe the euro, yuan, yen, gold, or even a digital composite, begins to share the reserve role. The dollar remains important but loses exclusivity. The system becomes multipolar, reflecting a more balanced global economy. Part 4. What a dollar collapse would mean. If the dollar's dominance truly ends, the world would feel it everywhere. Financial chaos. Treasury markets would lose their status as the ultimate safe asset. Liquidity dries up, credit spreads widen, and volatility explodes. Rising borrowing costs. The US government, businesses, and households all pay higher interest to borrow. Inflation surge. A weaker dollar makes imports more expensive. Combined with debt monetization, prices could spiral. Part 5. Neutral reserve assets return. Throughout history, every paper reserve system has eventually failed and been replaced by neutral assets. Gold served that role for centuries because it carries no counterparty risk. In a world of fiat uncertainty, central banks have been quietly rebuilding gold reserves. Some nations are also exploring commodity-backed or digital reserve systems that don't depend on any single government's debt. Part 6. The inevitable shift. The death of the dollar doesn't mean destruction. It means evolution. We are likely entering a post-dollar world, where multiple currencies, assets, and technologies share the reserve stage. The global system is de-Americanizing, slowly, unevenly, but unmistakably. For the US, this means adapting to a world where power is earned through credibility, not assumed through privilege. For the world, it means rethinking what money really is: trust, stability, and neutrality. The dollar won't die in a single day. It will fade, gradually, as confidence erodes and alternatives mature. But when that day finally comes, it won't be the end of money. It will be the beginning of something new, a reminder that no empire and no currency is immortal.